You're in the process of doing this share buyback. The question we want to know, is this the start of a multi-pronged buyback? Can we expect more? And if so, what size in 2021? Good morning.
Hey, good morning. Thanks for having me. Now, I think one of the things you've seen that we've announced our results today, and I think it's fair to say that they've been strong. We've seen particularly our growth accelerate after initially we saw impact of COVID like everybody else. And that has allowed us also to increase profitability, which we've done over a number of years now. And that gives us the financial flexibility to start a buyback. And we think at this point in time, it is actually an excellent use of our capital, given that valuations are running very high. And on the other hand, I think our stock is trading at such a significant discount. It's an excellent buy for us to use our capital for.
So was this a one-off then?
We haven't even started. So I think the most important thing is the rationale behind it, right? So we're saying at this point in time, we have the capital to invest in our core business and do this buyback. And we think the buyback is a significant one, which will start after our results are fully digested by the market. And we'll see how it works in the future.
I want to get a sense from you, Bob. Obviously, the big news flow was that you missed out on the Just Eat deal. I want to get a sense of your risk appetite. Missing out on a deal that size, has it made you more aggressive to find the next deal, more pro-risk, or has it caused you to take your foot and step backwards and go, wow, that was a bit of a shock?
Yeah, I think it was a very specific case, right? If you remember how things played out, in the end, we decided that we did not want to pay more for the asset than our final and best offer. In the end, we had another player in there that was willing to pay very meaningfully more. And I think it is a sign of great discipline that we decided not to overpay for this asset. So with that, I think the exact same applies the next time we look at a major acquisition, right? We look at, hey, what is it worth to us? How can we create value for the long term from this? If we believe it's worth the price, we'll pay for it. And if we don't, then we won't.
Also, the eBay classified business as well. In terms of Manas's question about are you still aggressive and where you're looking, can you give us a sense at what sectors or geographies you're open to in terms of potential acquisitions?
Yeah, so if you look at the last 6 months, we just published results we invested about $600 million in different businesses. And if you look at where the majority of that spend went into our food delivery business, where we have a fantastic business that's growing at well over 100% year on year in many parts of the world. We've invested meaningfully in edtech. So we became a early stage investor in edtech about 5-6 years ago. We have a portfolio of 7 investments in that space that we've again done further follow-ons on in the last period. So we see you have these business models that were already on a great growth trajectory and actually have been accelerated because of COVID and people having to stay at home. And we intend to keep investing in those great models to make sure we benefit from further growth.
Bob, what is the one area that you think really will hold through and stick after COVID-19 and after we get a vaccine? Where do you think is going to be the winning technology trade post-COVID with endurance?
Yeah, what we have seen is that as a result of COVID, many people tried online models that they previously haven't, or they used them for occasions that previously they hadn't used them for. Think of buying certain sets of items or ordering food for a certain meal occasion. And what we've seen now, even when COVID has taken a step back over the summer, in most places, a lot of those habits are actually very, very sticky. So people, driven by necessity, change their behavior. And we see that behavior actually becoming a habit that will continue to stay. So I would say in both food delivery, we've seen many new customers come onto the platform and people using it for different things. In edtech, we've seen people be more at home, actually wanting to educate themselves, and that doesn't stop when people have more freedom. So I think it's really you taking forward a generation of user behavior that was coming, and it just came a whole lot earlier, and it's going to stay with us.
Bob, it's been more than a year since Prosus was spun out of Naspers, and part of that, of course, was about the market value between Prosus and Tencent. Yet the gap has not narrowed. Why not?
Yeah, you know, actually, if you look back to the Prosus listing, it had a few objectives, and I think the main one for us was that we are a growth company, right? And we had become very, very large as a company on the JSE. We're about 25% of the index. So it was necessary for us to attract a completely new investor base of US-based and Europe-based investors. And Prosus actually completely delivered on that. If you look at the shareholder makeup, it's a very different shareholder makeup for Prosus than Naspers. But to some extent, we've become a victim of our own success. So in the last, say, 10, 11 months, we outperformed the JSE stock index by more than 35%. And as a result, again, sort of the Naspers share is very, very large on the JSE. It's now well over 25% of the Swix index, which again leads us to see pressure on that discount. But in the end, Prosus was great for us because we have diversified our shareholder base, and it gives us the opportunity for further things in structuring terms.